My name is Mark Shawson, the pattern trader. I'll be with you in just a moment. In the meantime, please put your name in the attendee box and we'll get started in a few minutes. My name is Mark Shawson, the pattern trader. I'll be with you in just a moment. In the meantime, please put your name in the attendee box and we'll get started in a few minutes. Hello, everybody. Welcome. Hopefully you can see my screen, hear me clearly. Please put a yes in the comment box if you can hear me clearly. Okay, thank you. Everybody's. So thanks for confirming. I'll give this another minute or so, then I'll just kick it off. Okay, guys, welcome to the webinar. My name is Mark Shawson. Welcome to the second day of this 4-day live event where I'm going to go into the markets, show you what I'm thinking, what I'm doing, how I trade, share my methodology on how I look to capitalize on monster moves in the market. Now, kind of walked you through some of my trades, over the last couple of weeks where I saw a setup on the NASDAQ a few weeks ago. I posted it in my newsletter where we saw an ascending, broadening price pattern on the NASDAQ together with a key reversal price action. I'll go on the live charts in just a moment, show you what I was thinking. Most people in this business, they're educators. They have all kinds of thesis and hypothesis about, theories about what they do. I actually eat my own cooking, meaning that everything that I'm talking to you guys about, I'm actually practicing and doing in my own trading, win, lose, or draw. And I've managed to be very profitable over the last couple of years. I've kind of figured out how to build a mousetrap around my weaknesses and capitalize on my strengths. And when I saw a setup in the market in the NASDAQ that suggested that we were going to decline, I started buying put options. Put options are basically a bet that an instrument is going to decline. In this case, the instrument was the triple Qs. These are the ETFs that mirror the NASDAQ performance. I ended up buying 350 of these things at a cost of about $1. So my total purchase price was around $35,000. And my strike price was $320, meaning that when I put this on, the QQQs were trading in the index at around 334 and had to put on like a 7% move just until I reached my strike. So it was a huge bet that the market was going to decline. And, 2 days later, the bet paid off. And I ended up getting out of these $1 options at anywhere between $5.75 and $8. So remember, I paid $1, got out of some about 800% return on my investment. I made $195,800 in 2 days, or 559%. Then the next week, I reloaded in front of webinar sessions just like this, in front of thousands of attendees. I began the Monday with minus 24,000 in my account. By Wednesday, I had 142,000 plus. I made 165,000. And then the following day, I was up to 348,000, which didn't account for a lot of stuff that I already took profits on. So I made about $500,000 in each one of those 2 weeks. Now, I've been kind of quiet right now. I'm kind of, sorting out which way this market wants to go. In the meantime, I'm just short this Zoom. So I should have began this, webinar by saying Zoom, because, I talked about Zoom yesterday. I said that I'm very, very bearish on this stock. I've been short in my own account. So this indicates I'm short 2,000 shares. It cost me, $700,000 for that transaction. And now it being down $10 in the market actually favors me, because by being short, you're betting on a decline. So I made at least $20,000 on these shares today. And then I'm just playing around. I bought some way in the money put options. You can see I put up a lot of money. When you buy in the money, you don't have as great a leverage. But because the stock has been moving around so much, I didn't want to buy out of the money put option. So I was just playing around on a bet that this thing would fall. It fell earlier today, and then it popped back up. So this is what I look to do, on a, whenever I can find something that makes sense to me on a strategic level. And, as I went through yesterday, we started by looking at the euro. And, I've got a small trade. I'm short 2 positions of euro here. We went through this yesterday, where to me, it all starts off with, what is the trend? Or if there's not a trend, if something is reversal, is there a price pattern? So, it's a combination of, either observing the trend or the price pattern. And so right here, I observed this double top. And double top is exactly what it sounds like. Market makes a high, backs off the high, then retests it. And when it comes through the neckline, it actually confirms that pattern. And so you can see this was an asymmetric double top, where the 2 peaks don't have to be in the same, level. So you can see one is higher than the other. But I think we can all agree that when we look back, this looks like the letter M, or an M top. And so, once it kind of busts through the neckline here, it somewhat confirmed this pattern. Now, just because something is going in a certain direction, or I see something, I don't just wade into the market, and put in a market order to sell here or there. I wait for what I call my insurance day bar. Now, what is an insurance day bar? This is just something that I've coined. And to my mind, an insurance day bar, presents itself in 2 forms, either in the form of what I call a key reversal, where the market makes a new high and then closes on the low. And, this is closer to the low than the high. So it is not on the absolute low. And we can actually see a key reversal just like that right here. Sorry, I grabbed the wrong instrument. Hang on one second. So right here is a key reversal, where at the top of this pattern, the market made a new high and then closed on the low of the day. Now, while it wasn't red, it was still, the close was at the low part of the day. And as I said, to me, the close is very, very important. Today, the NASDAQ went all over the place, and I was hoping it was going to close right on the low, which would have given me a, great sense of confidence, but it closed right in the middle, and we'll talk about that in a minute. The other form of the insurance day bar is what I call an inside day. Now, if you're looking at a weekly chart, it can be an inside week, on a monthly, an inside week. And what it simply means is that the range of this particular day from high to low sits within the range of the prior day. And you can kind of see one of these inside bars occurred yesterday, where you can see the range yesterday from high to low sat within the range of the previous day. So we call this an inside day bar. And the meaning of this to me is that it just represents a coil or a storing of energy. So you can see what this means is that for that day, it couldn't go high, it couldn't go low. It's just kind of coiling, it's building energy. And to my mind, that energy just will release in the direction of the prior trend or pattern. And since this pattern that I'm looking at looks bearish, when I saw this inside bar yesterday, I sent an email to our members simply to put a sell stop right under here and let the market confirm you. Now, the beauty of that is that, during this session, The market opened and went considerably higher yesterday. Could have been 2 in the morning, 3 in the morning, and then, triggered me into the market. I could have been sleeping. And that's the beauty. I don't have to be sitting in front of my screen watching my eyeballs bleed while this thing is doing its work for me. I simply put my sell stop in there, and now I'm on. It's away. I'm short at 119.07. It closed right there, and so my stop loss is right up here. So this is my risk, and I'm looking forward to perhaps go down and hit this level of support, which if it does, it'll represent a 3 or 4 to 5 to 1 risk versus reward. And you can see it's pretty crowded in here. There's a lot of price action that this has got to get through. So tomorrow is going to be a huge day. Tomorrow, Jerome Powell, the Federal Reserve Chairman in the US, will give testimony on interest rates. It's widely expected that he's going to keep interest rates low for an extended period of time. But the market is looking to see if he's going to change his mind as to when he's likely to start raising interest rates. He was looking to keep rates low, through 2023, and now the market's saying that he may start raising rates as early as late next year. So, if that happens, you're going to see all kinds of, market cross currents go on all day tomorrow. And, the way I handle that is that if you're looking at, tomorrow's action on a, 5-minute chart or a 15-minute chart, you're going to see, this kind of action. It's going to be up 80 points, down 80 points. I simply, I'm in this trade, and now it either reaches my objective or it doesn't. So now that, the trade is on its way, I will leave my stop loss level right there. And if the market takes me out, goes the other way, I'll be ticked out of that trade and, be on my way and look for another trade. But this is basically an anatomy of how I set up a trade: pattern, price action, execution. And it's a layered plan that puts me in, the direction of a high value risk reward play. If I make it, I'm going to make 5 times my risk. If I don't, I risked 0.5% on this trade, and I'll be on to the next trade. So now I spent a lot of time looking at the NASDAQ. I've spent a lot of time looking at the NASDAQ over the last couple of weeks. I've made a ton of money, and, I'm looking to, reload, if this thing starts, going lower. So the one pattern that I was looking at yesterday was a pattern called an ascending broadening price pattern. And I said, yesterday, this was going to be the zone of opportunity. That, if it got to this lower level of the ascending broadening price pattern, that was likely going to be the high, if we're going to, go lower. On the other hand, if the market starts, creeping back in here, then, all bets are off, and, this thing's going to go higher. So we're really at a moment of truth. I was hoping that this would resolve itself one way or another, close at the high or the low, but you can see that we close like right in the middle. So to me, the close is really important. It sets the tenor, going into the next day, and lets me know, if so. Based on the way this closed, it wasn't hugely bearish, but we'll take a look at this in just a moment. So let me just make sure that you understand what this pattern, why it's called an ascending broadening. So throughout the pattern, it ascends, and then it starts life narrow in the pattern, and then widens or broadens at the top. And again, I draw these structures around prices, and then I see how prices move within these structures. So like I said, this is a very pivotal area that we're either going to stop here, or if we go through, then it's likely that we're just going to continue higher. So we're at a real inflection point, and tomorrow, with the Fed testimony, the way the market moves, we should get a lot of insight as to what the next direction is. You can see that this level right here is there's a lot of resistance. And so if we stop and go lower, then, that's going to be one result. If we go through here, then it's likely going to, turn this thing back higher. Now, in addition to the ascending broadening price pattern, I said that I also saw this head and shoulders price pattern. And a head and shoulders looks just like it sounds. So this would be the left shoulder, the peak is the head, and then you have the right shoulder. So it looks like a man or woman's head and shoulders. So this is, a bearish price pattern. It indicates a reversal of trend. So whereas the trend leading into this reversal pattern was an uptrend, if this is a reversal, then we should see the opposite. Now, if these patterns, that present themselves, if they're good, if they're true, then the market should start going according to that pattern. If this thing keeps going up and fighting this thing, then that pattern is no longer going to be dictating, the action. And we call this a busted pattern, when the market goes in the opposite direction as indicated by the pattern. But I already made a huge amount by just observing the beginnings of this pattern. Typically, like I said, I try and take a piece of the middle out of a big trade. The NASDAQ dropped 15% over the last couple of weeks. And I got in right here. I started buying puts and I started covering my puts right there. And I made 7 figures in that trade. So this is what I'm looking to do on an ongoing basis. Take pieces of the middle out of these trades. Now, if this thing starts resolving itself to the downsides, as I still kind of feel like it will, to my mind, this is where I put the price tag. This is where I put my initial objective. So when we bust out of an ascending broadening price pattern, typically you retreat back to the beginning of the pattern, which would put the NASDAQ around 11,400 or 1,500. Frankly, if it goes there, I would look for a lot lower. So that's the NASDAQ, which comprises most of the tech sector. Now, let's kind of take a look at what's going on with the S&P and the Dow, because I think they're also at some very interesting junctures along their way. And tomorrow is going to be, a huge catalyst one way or another. Now, what I would bring your attention to right now is that you can see today's range, even though we closed, was an extremely narrow range. And typically I look at these ranges, they're not as benign, as innocent as they look. So this could turn into a huge reversal, so I'm looking for how this thing plays. And frankly, I wouldn't be surprised to see this thing, go higher and then trade lower and look something like this. Because I'm also looking at the S&P through the prism of this ascending broadening price pattern. So when we connect the highs and lows, we have this broadening, which means that we could still run up to this 4,400, which would be at the top of this pattern, at which point I'd look for it to retreat there, and then I would look for it to come there. And I still feel that's what's going to happen, whether it's going to happen, to this week, or, we have to go make new highs. I still feel we're going to retreat back to this lower boundary and through there. So to my mind, it's just a question of time, when that happens. And so, in addition to the ascending broadening, we're trading at all-time highs. So we're at this, potential double top. Now, just because we have 2 peaks in the same area, doesn't mean it's a double top price pattern. What I look for, is confirmation that if I'm looking at this as a pattern, I want to see a price bar or price action that then confirms what I'm looking at. So if I think we're at a double top area, what I'd love to do is see this tomorrow. Make a new high, close on the low, where you did the same right here. And then it would kind of give me a feeling that we're going to, come back here. But I'm kind of getting ahead of myself. Just want to, I'm putting, what I do again is put a boundary around prices. So when we look at prices like this, it just looks like nothing. It looks like this. But by putting a structure, I can then understand it. So now once I put a structure, then I look at the price action. And like I said, the path of least resistance is still higher. We still could go to the upper end of this, structure before we see anything. These bars right here, these reversal bars where it made a new low, close on the high, indicate that, the direction is still higher. There's a lot of support under here. And, tomorrow is going to be a very catalytic day. When I kind of just look at this thing, just visually, I say, okay, even if I'm thinking of taking this short, I don't see a pathway where this just goes like this. this has to kind of do something to open up, it has to create some separation from this uptrend, way here so it can fall. And so to my mind, you're still likely to get some kind of up move before, but I would watch the high and low of this very carefully. So in other words, if we start going higher, I would basically just, sneak in a sell stop right there, because if it reverses and takes you, it could take you, and then if it keeps going, then, no harm, no foul. But this is what I try and do. I try and look at these little ranges. This is a very narrow range bar, and it's going to do something tomorrow. The range is going to be much wider. So I will play around with certain scenarios where if it gets going, I'll actually put a sell right at the unchanged level, because my thinking is, if it's good and it's going to keep going, then fine. But if it comes through unchanged, the previous day's close, then it's likely to go the other way. And then I would just put my stop right on the other side of the high. So, you have a very small risk. So I'll play, games around this kind of dance around a major area here where I think there could be some resistance. So we'll see what tomorrow brings. But it's going to be a very important day, an entertaining day to kind of stake out here. Now, the Dow Jones Industrials also has this very narrow range at the top of a major trend. And I've learned that, these narrow ranges, they look benign, they look like they're nothing. But to me, it could be the beginning of a reversal, because what it says to me is that yesterday the market made an all-time high, and today we really couldn't follow through. So, it's kind of stalling out at the top. Now, it could be just, the pause that refreshes before, it picks up steam again. So, don't want to read too much into it, but, if we start coming through, today's lows, it could open up a swath lower. So you can see that we also are right at the peak of this ascending, broadening price pattern in the Dow Jones. So this is, a major area where you connect all of these highs. And so for right now, that is, a major area for this thing to get through. Now, it's not to say that it can't. It's just, it's going to be pretty interesting here, where you could go higher, and through here, you could get, a lot of different scenarios, happening here. Now, frankly, I look at, different charts for, different corroboration. What I'm looking at, one of the ETFs that really approximates the NASDAQ and has got the imagination of a lot of young people, because it's run by this woman, Kathy Wood, who's the new kind of new age guru. And to my mind, this chart has some very bearish price patterns. So this is an ETF that has a lot of the technology stocks like Palantir and Tesla and some gaming stocks, whatnot. But right now, this ETF, the acronym is ARKK. It's ARK Financial. And so we also see, this double top up here and this head and shoulders. Now, what's interesting to me is you can see that the right shoulder, I don't know how well you guys can see this, is lower than the left shoulder. So it creates this drooping or downsloping neckline. So you have this head and shoulders, which again looks just like a man or woman's left shoulder peak, and there's the right shoulder. So again, just like the NASDAQ, if we keep going up, then it's just going to, show that this was not, a meaningful chart pattern. It was meaningful in that it gave you a serious move from 160 to 100. And sometimes these chart patterns just, reveal themselves and then go back the other way. And if they do, then they're just busted price patterns. So you can see that we stopped right along this major, thoroughfare. When you connect all of these lows, it, retraced to that major area, and, that may be it, and we may be on our way. But to my mind, this looks like it needs to revisit here. And if it revisits here, it looks like it's got, a long way to go. So this is the moment of truth. We have a collection of, bars up here. And today we had a key reversal in ARC where you made a new high, close on the low. So to me, instead of playing guessing games, I let the market confirm what I'm looking at. And if I was going to short this, I would simply just put a sell stop underneath here, let the market pick me up, and I put my stop loss somewhere above the unchanged. Unchanged means the prior day's close, which is about 126. So this would be my risk, and I would set it up for a huge reward. So again, I'm looking at a lot of these charts, and they're looking very bearish to me. And that's why I still feel that the NASDAQ, will, should roll over. But, again, we're at this moment of truth where tomorrow is going to be, very, very telling. So one of the other stocks, I'm looking at a lot of stocks. I talked about Zoom. So, there's the first tier that comprise the NASDAQ, which are the FANGs. The Facebook, the Apple, Google, and Netflix, and I'm sure Amazon. And so they're the first tier, and they've kind of flatlined where they're just, Apple's come off like 10, 15%, Amazon's kind of unchanged, flat. They're all flatlining, but there's a second tier, the Pelotons, the Zooms that all have taken off over the last year that I think now are just going to, are just going to get kicked in. So I'm not watching this chat box. There's some chatter going on there. So maybe I'm missing something. I'm just trying to keep my eye focused here. So this is Zoom ZM. I said yesterday that I was short Zoom. And frankly, I'm looking to, pick up even more shares tomorrow on the short side. So this is Zoom, ticker symbol ZM. And again, whether you're interested in these instruments or not, really what I'm trying to do in these sessions is demonstrate a methodology that you can apply. I don't care if you're trading cocoa futures or the euro versus the yen or gold. It applies to anything that has a high, low, and close. And so I look at interest rates. I look at all kinds of exotic things through the same prism of price and price action. And, perhaps it's just useful to note right here that there are, you don't see any volume here. There's no moving averages. There's no Bollinger Bands. There's nothing on this chart. It's called a clean chart or a naked chart because there's nothing on here. There's no indicators. There's nothing. It's just time and price. That's all I'm interested in. And I can make millions of dollars just looking at a picture. So you've heard the saying, a picture is worth 1,000 words. I can just look at this picture and tell you what's going to happen. That sounds very arrogant, but to my mind, there's like kind of no mystery about what's going to happen here. This stock is going to get caved in. This is just going to get dented. It starts all the way up here with the double top. The head and shoulders here. There's another set of shoulders here. So look at complex head and shoulders. You have another double top here. You have the key reversal today, made a new high, close on the low. Now, yesterday I said that we had a collection of these inside bars that for the last, and it's 1, 2, 3, 4, 5 days, we've shared a range between, say, 335 on the downside, 335 on the upside. And again, what all this means is that this is coiling. It's building up energy. And to my mind, it's going to release its energy in the direction as directed by the multitude of these bear price patterns. The double top. So that M top right up there told you exactly what was going to happen to here, to this juncture, and, to that juncture. And I don't think that's going to be, an overstatement. I think this thing's going to get cut in half pretty quickly and then cut in half again. So, this is the disparity between, looking at trading through the prism of the news. So Zoom has made all our lives better. It's facilitated our lives while we, had to work at home. But to my mind, this, company has no defensible moat around it. Google or Microsoft could get into this business tomorrow and offer you video conferencing for free, just as part of their services to get you to, buy something else. So, also, we're going to be facing decelerating cash flows in this business, meaning that, made all this money in the pandemic. Now the economy is going to open. So we can only surmise that less people are going to be using it. And then rates are going up. So you have to discount its future cash flows backwards at a higher discount rate. So it's just everything that's telling me that this thing it's done. And so, I don't wait for something to drop to buy it. To my mind, gravity works and things fall, much faster than they go up. And so if it's going to fall, you can do what's going short, which is a transaction that is done by your broker, and sell short the stock. And that's what I'm doing now. With all this GameStop phenomenon, it has been dangerous to short stocks. But again, I'm just going on a picture, and I don't really see any risk now in shorting this stock. I think, you've got a high here at around 355. And I think that's probably the high that you're going to see for a while. So we're sitting right on this neckline, which connects this entire bear price pattern for the last 6 months or so. This has actually been distributing. So it stopped going up, and now it's, been actually in a stealth bear market. And I think that bear market is going to start picking up in earnest. And so I'm short the stock, and imagine I will be increasing my ownership of those short positions. So Ben says, Mark, you're insane. Have you got dementia? I probably do, but that doesn't rule out that I'm a great trader. So Aaron says, where would your entry be? So again, just look at the high and low. Today's low was 333.69. So I put a sell stop at 333. Your stop loss is 355. So you have to risk 22 bucks to make probably 100. So it's probably a 5-to-1 risk reward on, this stock. So Ben, if you've got something to back up your accusations, then please do so. But I'll match my bank account against yours anytime. And if you don't like it, then, you can just save it to yourself. Tina says, so that is an equity risk of 7 to 11% equity per trade. No. So if I take a trade, I equate that trade to 0.5% to 2%. So if I really like something, I'll take a 2% risk. So I'll figure out if I lost $20 on my account size, and if I had to limit that to 2% risk, then I figure the size of my position. So there is a handy position size calculator you can use for FX. I'll put this in the chat box. Let me just put it here so you don't have to scribble it down. So this is a position size calculator, which does exactly what it's designed to do. It tells you exactly how big a position you can have for your assigned risk. So yesterday I had a trade in the euro. I was risking about 60 pips. You can use this calculator almost anywhere in the world. I'm going to assume a US dollar denominated account. And let's say we have a $2,500 account. Now, this is where, so most people are used to assigning their risk in terms of pips. They think, well, if I just risk 10 pips, that's not a lot of risk, but then their position size is too big. And then if you take 10 trades in a row where you're risking 3% on a 10 pip risk, you're going to get cut up pretty quickly. So you can put as low a risk as you want. I typically tell our members to put a 0.5%, 0.5% risk on any given trade. So now you can take as big a stop loss as you want. In the case last night, let's say it was 65 pips. And then if you're trading a $2,500 account, you probably want to trade with either mini lots or even micro lots. So let's say it's a mini lot account. You hit calculate. This tells you what your position size should be. Let's say, you know, all goes wrong, the world comes to an end, you get clicked out of your 65 pip risk, you lose $12.50 of your $2,500, and you live to fight another day. So basically, if you keep your risk to 0.5% on every trade, it's almost impossible to get wiped out unless you really just don't know what you're doing. So, you know, I could send you 10 bad trades in a row. And if you're risking 0.5%, you've lost 5% of your account. So I could easily lose 10 trades in a row. And, you know, on the 11th trade, make, you know, 20%. And frankly, I got to be honest with you, that's really what happened to me. I went into surgery about 6 weeks ago, so I know exactly what was happening at that time. At that time, I just couldn't do anything right. I was buying Lyft, you know, before it broke out. I was buying IBM. I was buying whatever, and my account went down about 20 or 30%. And then I saw the Lyft trade where I started buying Lyft at 46, the stock LYFT. I was buying the options of Lyft, and I made like, you know, 700% on those options. And, you know, all of a sudden, you know, I went from a 20, 30% deficit to now my account's 400% higher than where it was 6 weeks ago. So this is the stock of Lyft. And I was telling my wife for like, you know, ages, you know, while this thing was a dog, it was being ignored. It was the second cousin to Uber. Nobody was paying attention to it. You know, I was telling my wife every day, I love this stock. I love this stock. Why? Because the whole history of this stock suggests that it's been doing for its whole life is, you know, is bottoming. So you can see it's got this giant double bottom here. So when I saw this, I was just salivating. So you can see this is where it basically cleared the neckline and confirmed that double bottom. And that's a W pattern, the word double bottom with the word bottom in it. It means that this is only going to go higher over time. Now you can see this is kind of where I got in early. And, you know, when I first started an account to test out this broker, and I went down like 20, 30%, you know, trading this in IBM, and I couldn't do anything right. And this is where, you know, trading is a process. It's not always going to go your way. And, you know, it causes you to second guess yourself and whatnot. But I've learned that the more I'm losing, it's just a question of time until I'm winning. I actually get excited because I know I'm a good enough trader that eventually I'm going to find something. And so I actually got in right here, and I'll show you why in a moment. And this is where it just started the whole turnaround for me, where I started buying the stock. I started buying the options, the 46, the $47 calls. It closed that week at 53. I made 800% on those calls in just a few days. I held the stock and made a boatload. And then I, you know, did the put roll in the QQQs, and my account went from, you know, 30% deficit to 400% gain. Now, you know, I did some kamikaze trading in there, but, you know, so this is kind of what I was looking at. And I know I was out of surgery the day after. I said I didn't want to trade. I didn't want to put myself under stress, but I've been watching the stock for so long. And then I saw this setup and I said, you know what? I can't stay out of this thing. So it was, you know, after I saw the double bottom, the long-term double bottom on this thing here and back here. So once I understand the pattern, then it tells me what the trajectory is. And then once I understand the trajectory, then I look for a set of price action that's going to put me in the direction of that trajectory. So right here was this double bottom where prices made two lows around the $43, $44. And then you see this was this benign looking inside day bar right there. So you can see that that range sat within the range of the previous day. And so I surmised that this was a double bottom. This was an inside bar. So I surmised if we got above here, that this thing would start rocking and rolling to the upside. And that's exactly what happened. So I started buying this thing early at 44 and a half, start buying the $46, $47 calls. It went to $53 that week. And that's, what started me on. And so this is what I look for, to take pieces out of the middle of a trade. Where, if something's going to do this, I see no point in just trying to take $2 here and $3 there on day trades. I'm looking to just take pieces of the middle out of big trades. So does that make sense to you guys? Do you guys see if this could help you in your trading, if you could trade this way? So Aaron says it's great. So a lot of people saying very good. This goes so fast. Sorry, your comments are coming in through so fast. Excellent. Yes, it's great. Robert says absolutely. Mustafa says super. Good to see you, Mustafa. Hopefully you stayed in those SQQQs and didn't get stopped out. So Larry says this is almost magic. It is, but it's very simple. So yesterday somebody talked about AMC, and I said you need to wait for a signal before you kind of get in. And today you kind of have this little inside bar. So I don't know if this is the beginning of a double top or whatnot, but this is a better day than it was yesterday to try and find, a risk reward opportunity in AMC. So I do think this is going to crap out at some point, come right back down to earth, be trading at $2 at some point. It's just a question of how far this thing gets out of control on the upside. So you can see, these tops don't have to be in the same area. I'll show you a second top in BYND that I traded, anticipating that was a double top, and made a boat full of money. So now you can see today we have an inside day bar in AMC, and it's inside yesterday. So now we can set up a risk reward trade where I think this thing is going to go lower. So if this is a top and we've made an all-time high and this is going to go lower, you can just put your sell stop underneath the low here today, put a stop loss above here. This is your risk, and that's your reward, where this thing's probably going to go to zero. So this is what I do. I look at patterns to create risk reward opportunities using a combination of patterns, key reversal inside day bars, but you have to understand where the momentum is and what the risk reward is. So I mentioned this trade in Beyond BYND. I've been short this stock forever, and I think this is just going to go down just a monster amount. So let me just peel back and look at the weekly just to put this in perspective. So this is an alternative meat, BYND. You'll read that the company's done all kinds of things with Yum and McDonald's and Kentucky Fried Chicken and on and on and on. And some analysts recently came out and said it was going to go to $184 because of all of this. So you can see, right? And to me, that's why I don't look at analysts. I don't listen to anybody but the market. So you can see here was your head and shoulders. Once you identified that, market went from 140 all the way to $40. Then it circled back, did another double. You can see all the resistance, in this area, above $190. It's just distribution up here. So once I kind of saw on the daily that we went to $218 and closed at, 219, that I thought that this was over. And so you can see that this thing has just been sitting on a shelf here at 113. And to my mind, the more something hits a certain level, it's just a question of time before it hits there again and takes that out. And I think that's what's going to happen with BYND. Now, this is a weekly chart, and this week, and it's only 2 days through the week, you can see we've got this reversal going. Yesterday it went higher, today it closed lower. but we don't know how it's going to close for the week. But I'm assuming that it's going to go back down to this level. So this is a trade that I did just like AMC, where I anticipated we were making the second peak. Now this is very asymmetric. It may not look like a double top, but in my mind, you know, I kind of start tracing out these chart patterns before they even go there. So I didn't have even this prepared for today, but I'll try and find that trade in a moment. So this was the huge key reversal. So the market had already made a double top in this time thing. And then with the whole GameStop phenomenon and all these traders searching for stocks with big short interest, you know, they pressed this company and they, you know, just put the price through the roof. But you can see that by the time this thing went to 218 bucks, and by the time it closed at $190. And it was right here that when this thing started to plateau here and then circle back up here, I kind of surmised that we were going to get, you know, another kind of rejection high. So you can see in this particular day right here, it closed right there. And then the next day it opened about $6 higher, around 178. And so I was surmising that this was the peak. And so this was coming up to be the second peak, just like this AMC. And so when this thing opened higher, I basically bought the 175 puts. So it's trading at 178. I bought the 175 puts for $2.50, which meant that this had to go to 172.5 for me to break even. And the stock ended up going from 178 all the way down to 161. And these $2.50 puts went to $12.50 here. I'll try and find it. I know you got people like Ben and other people who are calling me all kinds of names, and you know, I don't like having to. Sorry about that. I should have turned my phone off. Let me try and find this trade. Here it is. So this is extracted off my broker statement. And here was, I bought the 175 puts when the stock was trading around 178. It was in BYND. It was around the middle of February. I paid $2.50 a call. I got out for $12.35 a call. I made 500% in 3 days. I turned my $12,600 investment into a $50,000 profit in 2 days, just by using all of the tactics that I'm showing you here, nothing more. So it can be done. So I just look at pattern, rinse and repeat, pattern, price action, execution strategy, and, you know, repeat. So now I just, you know, see all of these bear price patterns in here. I see this kind of shelf at 113 that I think is only a matter of time before this gets taken out. So I think it's important just for you guys to understand context. And so I'm going to try and find something, because this is why I say you can't hang out in forums. You can't listen to experts. So I'm going to show you something from an analyst that I'm sure gets paid $1 million a year to, you know, put out their opinion. So right when I was shorting the stock, this analyst puts $184 price tag on it when I was short like around 147 bucks. So, you know, it puts a, you know, a goose step in your heart, you know, and this analyst said, you know, Beyond recently signed new partnership agreements with McDonald's, PepsiCo, Yum Brands, all this stuff. Going forward, the situation looks brighter, Beyond Meat, blah, blah, blah. 3-year partnership with McDonald's. You read all this crap, and they put $184 price target in it. I'm putting an $84 price target in. So let's see who's first. I bet you this goes to 84 bucks before it goes to 184 bucks. So this is why There's only one person you have to listen to, and that's the market. So Nate, thank you. Nate says you're the best. I don't know about that, but thank you. Mohammed, thank you. So Zach says, every time I've set myself up for a trade, then someone opposite advice is introduced. So I changed my strategy. I've lost money. So that's frankly why I didn't want to do this business. I've been a successful trader since 2000 on my own, just trading my own account and playing tennis during the day and being left alone. And then my marketing partner, Peter, around 2010, 2011, we met each other, and he begged me to start kind of an internet business to share my trades with, retail people. And I said, look, I don't want to do it. I know this business. This is a solo business. And I also know myself. I know that, I'm going to go through a losing streak like I did 6 weeks ago, where I lost 20, 30%. I can handle it. I know what my money situation is. I know what I'm doing. And, when I go through that, then, I'm just going through it on my own. But I know if I'm going through it and thousands of people are following me, then it's going to, turn into something that, is more pressure than I wanted. And so for 5 years, I really resisted him. And then I saw all the fraud and deception that was being committed out there. And I thought I could do a better job and wave a white flag and, be a little bit more transparent and show you guys exactly what I do and how I do it. And it's not that difficult. So, but what, I was really saying is that you have to go into, a rabbit hole. You have to shut off all of the distraction. I put out my videos, and I know there's thousands of comments under the videos. I know there's thousands of comments on this thing, but I never look ever at my Facebook page, at my, once every 6 months, I read the review website, and sometimes I get tears. People tell me that I've changed their lives and whatnot, but in the main, I don't hang out on, I don't listen to anything, because you cannot be objective in this business. If I said sell a euro yesterday, I'm sure there's 1,000 of people much smarter than me, if I went and found it, that are telling me that the euro is going, higher. And so to my mind, it's, you have to just look at the empirical data. And that's why I also look at how a market closes relative to its high and low. I wait for the end of the day before, I see the setup clearly. Because, during the middle of the day, when you're trying to fire at something, you think it's going in a certain way. And then you find out that by the end of the day, it's, it hasn't. So to my mind, you have to, keep focus and just, keep your eye on the close. So one of the things that I'm looking at, and sure a lot of people are, I was asked about this yesterday, was Tesla. To me, that's the bellwether. And I said I thought this stock is going down. Now, there was an analyst on last week I was watching. He said this, stock is a paradigm shift. He put a huge price target, and I'm saying I'm short this stock. So, it's like very difficult, because that guy is way smarter than I am. And all I'm looking at is a picture. And some pictures are clearer than others, but to my mind, if I had to pick a direction and have a gun put to my head, I would short this stock. I think that you've had, and it looks kind of subtle here. You had this double top here, and it cut through the neckline. Now it already made its move. If you shorted that stock out of that double top at, 900, the thing went to 500. So sometimes these patterns reveal itself. You take the trade, you get your piece out of the middle, then it can now go in the other direction. And if it does, then I'll get that piece of it. But I said to you yesterday that we have this coil going on between 665 on the downside and about 720 on the upside. So you've got 5 days, or actually 4 days, where all of the range collectively from high to low of the last 4 days is within the range 5 days ago. Now, because of this pattern, I think that this will resolve itself to the downside. So the way I would attack this is I would put a stop under today's low, or if you want to be really conservative, under this low, which is probably around 660 bucks. This would be your, risk. And, I would think, I don't know what the reward will be. I think this thing is going back to 300 bucks. Now, I know people think I'm from the moon when I say that, but I think it's entirely possible. So this is also every stock, the NASDAQ and everything hit this major support line last week, and, it's bounced off here. But if we revisit here and start sneaking below here, then watch out. There's, I think a ton of white space that this can fall into. So, I'm just looking at this. And so I would just, create a risk reward calculation here. And again, tomorrow is going to be the light show where we're going to know a hell of a lot. So Carrie says, I did short Tesla on learning about the double tops and I've made a load. Thank you. You're welcome, Carrie. Ziad says, what is your price target on Zoom? Sometimes you can measure price targets. Sometimes I just visualize it based on the setup. But frankly, objectively, the way you can measure these things is take a minimum measurement from high to low. So, from the high of this pattern is what, 590 to the low, which is 320. I'm terrible at math. What is that? 270 bucks. Let's say you take 3/4 of that. So I would $200 off this puts us at, 130. Yeah. Now that sounds crazy, but I don't think that's going to be outlandish. So you can message me back if you think I'm out of my mind. But, I think we'll see this stock back at 100 bucks. So this is the weekly chart. Sometimes I get ahead of myself. I started shorting this yesterday with no kind of key reversal, anything, just because I just have a vision for this thing and it's not a friendly one. So here's the weekly chart. You have the double top here. You have somewhat of a double top here. This whole thing is just sitting on this neckline. Now, you could continue to go back and forth, in this area, but I think it's just a question of time before we open up. So we're at, a major support area, could continue to back and fill, but I think this has got a lot of exposure to the downside. So let's talk about some other, currencies that I'm looking at. So I've been really focused on the NASDAQ because there's just, I think, so much opportunity you can see with stocks, with the indexes right now. It's really at, a moment of truth, whether it's going to go higher or not. And when I dig in and look at all of these stocks and look how bearish they all look, I just can't believe that we're going to go up higher. But you can't fight the index. The index is made up of the Facebooks and the Apples and the Amazons. And so you just have to look at what's in front of you, create a risk reward trade, and move on if you're wrong. The other currencies I'm looking at is pound versus New Zealand dollar. And this is, again, something that takes your eye off the ball. If you, kind of don't know what you're looking at, or you think it, it looks fairly random. So if I'm looking at all this price for the last, several months, going back to when, September, it just looks like this. So you can say, well, this is an equal shot of going up or down. I think this has got a great shot of going much higher. And again, I'm just simply looking at the pattern in here. This double bottom, it's just been crawling along this neckline. It looks a little bit heavy in here. Heavy means that there's a lot of price, going on here. So, it's the monthlies look terrible, but I just look at these reversals right here. So when things look a little bit ambiguous, I dig within the ambiguity and try and find where it makes sense. And you can see these key reversals, made a new low, close on the high, made a new low, close. We've got a sneaky reversal here. I don't know if this is enough to put this up here. We're in this kind of wedge where, it could kind of fall back out of here. So I'm kind of on the fence, but again, perfection is the enemy of the good. What I'll do is I'll sneak a buy stop somewhere in here and look for the market to confirm what I'm looking at. So I'll put a buy stop there, put my sell stop there. That'll be my risk. And if I'm right, that'll be my reward. So, right now, I'm not quite sure if this is a reversal that's going to, levitate this thing. It's got to clear all this price thing. So sometimes you just get a feeling on, how something's going to go. But, I think I put up the weekly chart. So this is actually starting to leak on the weekly. So I think I'd actually be inclined to hold off on this. I don't think there's any rush. Even if it goes up, I'll catch it. So I've been kind of on the fence about this one. I made a hell of a lot of money trading this thing on the upside and the downside. I spotted this double bottom price pattern in late 2016, early 2017. And right here, when I saw all these key reversals, I started telling our members, you got to buy this thing. It's going to go much higher. We took a ride to 189. I remember that very clearly, made a bunch of dough there. And to my mind, you have this double bottom. You also have this rounding bottom. And so collectively, I think this market has put in a bottom. And then you see that there's a double bottom here. There's another one here. And so there is a foundation underneath this thing. Now, it's been hard. You can see that, it just really goes both ways of neutral. So you just got to catch this thing right. And so, the way I would play this is maybe wait for this weekly bar to close. So when something's ambiguous, I'll just wait for more history. So I don't have to jump in. I don't have to make a mistake. Let the market tell me. And, by the end of the week, the weekly bar looks like this, then I'll have that information. If on the other hand, this thing starts leaking down and we look like this, I'll leave it alone. So for right now, I'm watching it. It is on my radar. I do think that we're kind of turning around here. I'll just kind of keep this on my radar. But, you also have these weekly reversals here too. Made a new low, close, made a new high, close on the low. I'm sorry. Made a new low, close on the high, made a new low, close. So sometimes the combination, like lift, this is what lift looked like before it lifted off, no pun intended. Just like that, where you had two closes on the low right in this double bottom area, and then it just took off. So I am keeping one eye open on this trade with the view that this thing is going to go higher. And you could put a buy stop, above the weekly high or above this high at 195. And if it clears that, we're probably going to go and make new highs, which I'm getting the feeling that it will. It's just taking its sweet time to make it happen. But I was saying at the time, even when I saw this turnaround here, that because the market went down so profoundly, markets just don't go down like that and go back up. The metaphor I always use is, picture like a super tanker out in the ocean. Captain gets a call from home, you need to return home. It would take fully 18 miles of an ocean to turn a super tanker around. And so the market's the same thing. It needs space and time to kind of go the other way. But the thing is, the market will give you a pattern before it changes direction. Very often people say, well, I don't understand why it went there and then went there. Well, here was your pattern. Here was your price action. Here was the pattern right here that was telling you. And just like anything else, know your history. Jeek says, can you look at gold, XAU, USD? All right, and I'll stop there and then take some questions. So, I was talking about gold yesterday, how we were trading this ascending, broadening price pattern. So all the way at 2100, I have been telling our members to get out, get short. I've been short for a long time. And then, I look at these pivots, what I call these reversals. So the market made a new low, closed on the high last week, right around, potential support area. I still think it's going to drop back to retest this support line. But, for now, once you see these support, then I kind of see how it looks. I still think on balance, I can't really see this thing kind of going up right away. So, I would be more open to shorting it. But, with this key reversal standing in my way, I took my profits on my shorts. I still got actually one short position open. And, I still think that, we're going to go back here. And then it's a question, do we bounce here or go there? So gold is, also coming to an inflection point. And the great thing about these inflection points is that once they show us, the direction they want to take, we can hop aboard, big trades. And so, everybody's been betting on gold on the upside. I kind of feel like it's going to go that way. So that's why you can't read the news. So you can see the two double tops here with that price action, where it made a new high, close on the low, made a new high, close on the low. Both of those guys were pointing in the direction the market wants to go. So sometimes the market points where it wants to go, and then it takes several weeks. So these are weekly bars. This is a weekly chart. So it took 5 weeks before it dropped out of bed. So even when you got your signal, you had to endure 5 weeks of sideways trading, before it got going. But like I said, then I look at, my insurance day bar. So here was one where you had an inside bar here, and I got short there at 1841. And then here was the second inside bar, and I added to my trade and got short at 1797. I had 2 trades go spiraling down here and make me over $500,000. So I don't think this is done. You might have a peak up here before you go there. But, obviously tomorrow is going to be, very telling. Then, I'll kind of dig into the daily bars, see what's going on here. This is the gold daily chart. So once I understand on a broad basis, then I look at this. And when I look at this, it's almost like no chance that gold can go higher. I know that sounds crazy. But when I look at this, I just look at the cumulative heaviness of all of these prices sitting on these 2 prices. So you've got all of this sitting on top of these 2 support levels. It's kind of like saying if you saw a tug of war between 400-pound sumo wrestlers on one side, with a tug of war with, 3 Girl Scouts weighing 90 pounds on the other side, who's going to win that tug of war? So, sometimes I can just visually see where there's just a cumulative distribution where you've just got this overhang. You see this, head and shoulders here. You see this head and shoulders here. And it's all sitting, it all basically just broke out. So now prices, do break out of patterns, then they snap back, and then, they go back in the direction. So I do feel like this is going to go lower. But, you've got kind of all this junk here and whatnot to clean through. But you've got some mini reversals here, very mini. And, if you're bold, just stick a sell stop underneath these lows at around 1720. And tomorrow it should be rock and roll. But, to my mind, I don't care what Powell says. The market's already spoken. And that's the thing. The markets are ahead of the news. So whatever he says, the markets are digesting and have discounted and will go in the direction that, of their trend or pattern. And if there's a reversal, they will reverse. And so we're in a tricky area here because you've got a lot of congestion to get through. But, any kind of snap back to here, 1750, 60. Again, I wouldn't just reflexively, short there. I mean, if it keeps going up there, then, you don't want to fight it. But, I would wait for an opportunity. If it shows you something, comes up here and does this, does an inside bar, builds away. And so, I expect this to keep going lower. Yes, it says, how do you manage your position once you're in it? Now, that's a very good question. And so, just like the market puts me in, the market takes me out. So for several weeks, I've been short gold. I've been short 2 positions gold. I hopped out of one of them last week on this key reversal. So like I said, I have been looking at this through a prism of the ascending broadening price pattern. I also saw the symmetrical triangle breakdown here. I also saw the head and shoulders here. Then you had another head and shoulders here. So once I got in both here at 1841 and here at 1797, then my objective was just the lower end of this pattern as a first stop, the ascending broadening. So I was telling our members that I thought we were going to get a pullback to between 1650 and 1700. And last week we got a pullback to 1671 or something like that. And then it reversed. So I got out of one of my positions and I got in here. So I made about that much money, and I'm still in the other, as I still think it's going to go. So what, the patterns put me in, the patterns in the price action, and then this price action suggested that, I might hop out here. There's a little bit of support, which could translate into something else. And so, the market puts me in and the market takes me out. Keisha says, great info. You're welcome. Daniel says, gold, double inverse head and shoulders at the 4-hour chart. So I don't look at the 4-hour chart. This is a weekly chart. And by looking at higher time frames, it also takes you out of a lot of the noise, and you can see the bigger picture, which allowed me to take a huge chunk of change out of this move. If I was looking on the 1 hour or the 4 hour, I'm sure I would have been in and out many times, and I wouldn't have made the $500,000 that I made on this trade. So again, it's not as much fun. You're not, as active, but this smooths out a lot of things that you could see on the 4 hour that I'm sure during this bar, there were probably many 4-hour periods where you're having a heart attack up and down and sideways. I prefer just to let it resolve on its own, see what it looks like, and make my determinations based very objectively on longer time frames. Because if you're looking at 1 hour, 4 hour, then by definition, your time frames, your objectives are smaller. So again, I'm not looking, it's great, take $10 out of the gold market here and there and $5 here, but the more you trade and the more you're in and out and the more you're confused, you're going to miss the bigger moves. So, as I said, I am just looking to take a piece of the middle out of moves like this. And you can't see it on 4-hour charts. So now, once I see a reversal like this, then I kind of look at the price behavior. And, if this thing starts failing, so I'm already looking for this thing to go lower. And so if this starts failing, so I look at how price should behave. If this is a reversal, prices should go up. But if it starts flagging and, losing steam, and losing energy, then, so it's all about the big picture. I still think gold is going to go lower. John says, how do you rate a trade? That's a very good question. It really depends on the size of the setup, right? So actually, if we look at this weekly gold trade, it had a 7-year setup before it broke out. So the bigger the setup, the more confidence you have in your trade and what you're looking at. So you might not be able to see these bars, but I'm just going to try and make a point. So I showed you the dollar yen yesterday where, based on 5 years of trading, I just, knew every time it rallied to short it based on the longer term setup. And at a certain point in gold made a double bottom around 2015, around 1050. And then it had this complex inverted head and shoulders, which is just comprised of a number of shoulders. So it's an upside down head and shoulders, an inverted head and shoulders, and a double bottom. Right here at 1050. So now you had this huge base with this shared neckline around $1,360. So when it started breaking out here after 7 years of building this base, to my mind, I knew that this was going to turn out to be a pretty good trade to the upside. So it's based on the position, the pattern, the size of the pattern, what's that pattern looks like. That will get me very excited one way or another. Now, a lot of times the markets are just ambiguous, trading back and forth. We don't know, and during those times, I'm just trying not to lose too much. That's my objective. Certain, trading things, like during the summer for currencies, historically is tough. And I'm just trying not to lose much. I'm just waiting in the reads, so I'm just waiting for my setup where I do know, and maybe this dollar yen is going to be, one of those things where, for the life of this pattern, every time it came up here, I just shorted the bejesus out of it. And I think that this is still probably another short opportunity. We'll have to see how this bar closes. But this is a descending triangle. And you can see that the descending triangle, by its definition, is characterized by lower highs. So every time this thing bounced, once I started getting a whiff of what was going on here, once I started seeing this cadence of, lower highs, once it came back up here, I got very excited about what this pattern represented, not only because of the descending triangle, but because of all of the patterns that went before it, the double top here, the head and shoulders here. So really, it was these patterns right here that told me what to do right there. So this is why, if you look at a 4-hour chart, you can't see what went on 5 years ago. And by seeing what went on 5 years ago, I knew what to do here. And I think I talked, I'll show you tomorrow, if I can remember, to put up those trades. I got short right there at 111.61, and I got out right there. Now, typically, I try and get a piece of the middle. It turns out I got every piece of this. And why did I put my take profit right there? Because I felt it had to retreat back to those lows. So I actually put my take profit a hair above these lows at 104. My take profit was 105.17. I got in at 111.61 and took out 650 pips. Now, I was in that trade for 3.5 months. Not in and out, not as much fun. And there were times where, it went lower, and then for 6 weeks, it went sideways and went higher on me. But I stuck to my guns. I said, it's going to come back down there, because I thought I understood the pattern that we were in. And I still think you're in this sawtooth descending wedge. And I think that this is perhaps a trap. We'll find out. And if it's not, and this thing's going to go a lot higher, then, I'll get hold of that. But I just feel that we're going to come back in here. So if this reverses, this may be setting up for another. And I don't know that just yet. So Ziad says, can you go back to pound New Zealand? I have a question about the chart. The daily or the weekly? Daily. All right, so let me just put on a little bit more history. Sometimes just by looking at this, I can tell So what's your question? Can you see a head and shoulders? In the near term or the far term? Right here? Okay, yeah, I can. So here is a kind of nuanced piece of instruction. Sometimes I don't know how to kind of explain fully. But just like I said on the NASDAQ, we see a head and shoulders in the NASDAQ. And if the market doesn't go, then that head and shoulders is not indicative. So actually, if you look at this, this is a huge head and shoulders. If you looked at this, you know, and just stopped looking at the market from here and just only looked at this, you'd say this thing is, you know, is going to get dented, that it's going to go lower, you know, and it shares this common neckline. Now, if I didn't know the long-term history, if this is all I looked at, and this is going back to last October, so this is a pretty fair amount of history. This is about a year and a half. But by knowing or understanding the weekly, where I saw that weekly double bottom 5 years ago, I know that this is a market that's going to go higher. So, but even if I didn't, you know, let's just play it out. So this is a huge head and shoulders bear price pattern, which should do what? It should send the market lower, right? If it's good, if this is a valid position, once it falls out of bed, we should see this. And so when I see these positions in the market, like the NASDAQ, like I'm seeing the head and shoulders in the NASDAQ right now, and if it is a good, you know, thing, then it shouldn't keep going up, right? Like the NASDAQ's doing. If it's good, it should just get and go. And so this, to my mind, has turned into a bit of a bear trap, where if you chase these lows underneath this neckline because you thought this was a head and shoulders, now you're trapped. And when, you know, market is a trap, it goes the other way very quickly. Once it figures out that it's got you squeezed, it will really tighten the noose on you. And I think that's what's happened here. So this is a thing where, yeah, you see the head and shoulders here. And for, you know, a while, that pattern was good. It gave you a good trade. If you took it on that basis, it gave you a good trade. But if you look at now, you know, stand back and look at this thing globally as to where's the next major move coming, I think it's going to go higher and much higher. If this thing breaks out, it's going to go much higher. You know, if it starts leaking towards here and then starts dribbling back down, then, you know, all bets are off. But I do think that this is a bear trap where the market, you know, has caught you, and now it's put on a head and shoulder, a double bottom. So the question you have to ask yourself when you're trading is this the, you know, the governing pattern, or is this the one? And in a vacuum, it'd be hard to say that is, but because I understand the weekly chart going back 5 years, you know, I kind of feel like that is what's going to happen. But again, we don't have to, you know, we don't have to struggle. Let the market do all the work for you. If you don't know where it's going, put your buy stop above here at 195 and go about your day and your life. You know, if the market comes back down here, you're never put in the market. But guess what? If the market does trigger you here, it's probably going there. Brent says, does the elite group have educational videos for beginners? So, you know, every day I send you something educational as part of the elite group, Brent. Ziad says, super, thanks, Mark. Ziad, you're always welcome. So Noah says, thanks for all this info. I have a question. How do you distinguish which is more important to look at in a chart when you have double bottoms? There's the trick. You have to have 40 years of experience. So hopefully that's what I give you in these things, because that's the trick. You have to figure out which is the pattern. Is this double huge? And you think this thing is so sizable that this has to be the thing. And then all of a sudden you're betting on it, and then you don't understand why is it up there. And so the market does throw you patterns all the time. Here's a head and shoulders. That is a valid thing. You know, here's a double. So how do you choose which one is the valid one? Well, to me, I think it's a function of understanding the history of this. And there's a double bottom on the monthly and the weekly that, to my mind, I think, will send this thing higher. But, it's been a very stealth, market, and we'll find out. But again, you don't have to drive yourself crazy. Just put in a set of, parameters and let the market do all the work for you. So I'm going to give you a link in a moment, how to, I had some problems playing the video yesterday. I think it's because of the Zoom software interferes. So what I'm going to do is give you a link, which will include the video inside of it. So let me just get that link right now. I'm going to put it in the chat box. And basically, if you want to join my elite program, just send us an email, markshawsanelite@gmail.com, with the subject line, "Let's do this." Now, the instructions will be in this link. And again, it's not something that we sell you. We don't offer it on our website. You'll talk to one of our team members before you ever sign up, so you'll know everything about it before you do. But please sign up only if you're really legitimately interested, because we only have time to speak to so many people. And this is, one of the more expensive things we do. It includes everything I do. So it includes my golf, my gold funnel. It includes the Master Pattern Trader, which is, I go through, these kind of lessons in extended way every single Friday at 11 a.m. Eastern time. So I go through all of the markets. Obviously, in this time I'm going through NASDAQ gold, a few things, but I go through like 20 different markets on those sessions. We have a good give and take, and the members that have been in there for 5 years. So people seem to really like it. So Emilio says, I'm an elite and truly highly recommend for people to join. So Emilio, thank you again, heartfelt, for your endorsements. Really appreciate it. Mustafa says, I'm an elite member. Absolutely the best thing I've invested in. So Mustafa, thank you again for your ongoing loyalty. And hopefully, you're still in that SQQQ. We'll see what happens tomorrow. Keep your stop at 1368. If it gets punched out, then I think, that move's probably not going to happen. So Norman says, I'm in Australia. If we missed the live Friday, do we get the recordings? Yeah. So everything gets, all the recordings go into the members area. As a member, you're given a registration, a login, and you can, watch these recordings whenever you want at your convenience. Go into our catalog. We've got, hundreds and hundreds of these videos. And so that's really what, the Pattern Trader is positioned for. It's like, yeah, it's great. I've had a great winning, a couple of weeks. This is not about giving you winning trades. This is about giving you a winning strategy that you'll be able to own for yourself, instead of having to rely on, analysts to tell you Beyond Meat's going to 184. You'll know for yourself what you're looking at. And that's really what I try and do. Point out where the opportunities are. I also try and point out where the potholes in the road are, how the market sucks you in with certain patterns, only to go the other way. And, so it took me a long time to figure all of this out. So Ajik says, I'm looking forward to get educated. So the elite program is $5,000 a year. And, some will tell you that they earned that back in, a few trades. And so if you're looking at it as a cost basis, I understand that, but you have to understand, you have to ask yourself the question, what is the value of an education? So people say, well, if I only have $6,000 now and I give you $5,000 and I can only put $1,000 in my account, then it doesn't make any sense. And if you look at it that way, I suppose, it doesn't. And this may sound self-serving, but the question is, what is the value of knowledge? So a couple of years ago, I don't know if I've got it here. I'm just going to wade through some of this stuff. I don't know if I've still got it in here. Yeah. So what is the value of an education, right? So 5 years ago, when I started the Pattern Trader, this was literally what the NASDAQ looked like. The NASDAQ was 4,700 at the time. Now it's 13,000 or 14,000. And so I was looking at this reverse triangle and kind of knew how this would play out. I knew it would break from the top. I knew there would be a measured move from the top of the triangle to the bottom, and it went exactly there. I said the projected move right up here was going to be 3,900. It went to 3,902. I actually frightened myself how close that came. Then it put on a double bottom and it went and made a new high. Fine. So the question is, if you got my daily, elite member emails with all of these patterns, you saw this every day, one day. So, I've been training for 40 years, but one day, I saw this 5 years ago, and then 3 years later, 3 years. So it might be, let's say it's 3 years later, you see something, but it can change your life, right? So I saw this reverse pattern in Facebook where it went to 195, fell out of bed to 140. Mark Zuckerberg was hauled before Congress. People thought Facebook was history. By virtue of that prior pattern, I knew it was going to go make a new high when it was at 140. So, I set up a whole bunch of trades knowing exactly what this thing was going to do. So at this double bottom, I bought the stock. I pocketed over 6 figures, waited for it to circle back. When it circled back and put this key reversal, I surmised it was going to go and make a new high. So I bought heavily out of the money calls, which are cheap, but it was a high risk because when the stock was trading at 160 bucks, I was buying these $185 calls for 30 cents a call. They ended up going to $4.50, and I made $500,000 on that trade. So the question is, what is the value of that education where, over and over every day you're getting, emails from me showing you chart patterns. And now the beauty of it is, even if you lose, you understand what doesn't work also. So it's like I learn from, you learn more from your losers than your winners. And so, I'm not going to make that decision for you. And it's up to you. We'll also do financial plans. We'll really work with you. So if you're interested and it's, you're truly interested, but it's a financial concern, just, we'll try and help you out. So Brian asked a very valid question. If you're doing so well trading and have an endless stream of income, why charge so much and pretend to help others? Well, it's up to you to determine if I help you or not. I don't pretend one way or another. Some say I have helped them, Brian. If you don't think so, then you should just move on. When the real goal is to make more from us that are struggling. No, that's not. It's a very legitimate question. And if I was sitting on the other side of the fence, I'd be, wondering about that too. Why am I doing all of these videos? Why am I spending all this time? If I just made a ton of money, I just shorted Zoom today. I'm short all, GameStop. I'm doing all these things. I made a ton last week. It's a legitimate thing. When I started this business, I had no idea what to expect. I just had a general idea, to send a daily email. It's morphed into so much more, master pattern group and all that. But what I didn't understand was that I would actually virtually inherit a second family from around the world. People like Mustafa and Emilio and dozens of other people on here that have been in my forums for years now. I talk to every week and have formed, I do these retreats every once in a while. I had a retreat in Florida. People flew from all over the world to see me. And, it's way more gratification to feel that I've helped people than to watch money, things go up and down my account. I don't need to trade at all anymore. I don't need to do anything anymore. I do it because why does Warren Buffett, he's 90 years old. Charlie Munger, his partner, is 96 years old. Why do they do a retreat every year in Omaha and do a 6-hour presentation, do a shareholders newsletter and a 6-hour presentation? They're worth hundreds of billions of dollars. Why do they need to? Why does Jeff Bezos need to, go to work every day? People do something because they enjoy it and, gratifies them. And so this is not for the money. I make way more than in trading than I do in my business. Way more. So Craig, thank you. Craig says, only when you're a teacher of something does one understand the rewards of helping others, no matter how big your bank account is. Mark is one of those. So, that's really where I'm coming from. I understand why look, there's a lot of fraud and misrepresentation. And frankly, that's why I started this business in the first place. I rejected Peter's, he was begging me to start this thing since 2011. I finally relented in September of 2015. And it's frankly, I didn't want this. But when I started like sitting on webinars, I started signing up for, different things just to see if I could learn other things from other people. And then I saw the level of misrepresentation and fraud and just deceptive practice and just the nonsense people were talking to you, showing you a 15-minute chart and showing you some Bollinger Band and how you could snag 12 pips here. And, to me, that just, made no sense. So I just thought I had something to offer, and it's up to you guys to decide if, you want to take it or not. And I'm very transparent. All of these screenshots I show you are from my actual trading account. And I would put my my hand on it, to say that. So anyhow, so David says, I like to point out that I give a lot of money to charity. I do. So all of my book sales, and I'll share my book tomorrow, I take those proceeds and I double the amount and send them to the American Childhood Cancer Organization. And donated, tens of thousands of dollars to them last year. So Ari says, I've been on so many webinars where they show many indicators and many stuff that I tried out and ended up losing. After I started to follow Mark's method in trades, the first time I could see something that made sense, and I actually got some wins. So Ari, that's fantastic. Good on you. And, thank you for that. Mustafa, thanks again. So Anthony says, I bought the book, but have not received it. Can you help? Just send a message to our support team if you at any time have any questions. Support at thepatterntrader.com. Did I say that right? Yeah. All right, guys, I'm going to see you tomorrow. Same time, same place, 4 p.m. Eastern time. I'm going to put the link again to the Elite. If you want to watch the video, I'll put it back in the chat box there. Thank you guys for your great endorsements. And for those of you who are skeptical, I certainly understand it. And that's why I do these free sessions. Because, it's up to you to make if this thing makes sense or not. It's up to you to decide. So I give you 4 days of this stuff, and if you don't see it's going to help, then that's absolutely fine. But try and call me a scammer when I'm showing you everything that I'm doing in live, real time. Is actually kind of humorous to me. So anyhow, thanks again, guys. I'll see you tomorrow.